Ladies and gentlemen, good day and welcome to Century Textiles and Industries Limited Q4 FY22 earnings conference call hosted by Antique Stock Broking Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Biplab Debbarma from Antique Stock Broking Limited. Thank you, and over to you, sir.
Thank you, Nirav. Hello, everyone, and welcome to post-result conference call to discuss 4Q FY22 earnings of Century Textiles and Industries Limited, hosted by Antique Stock Broking Limited. Today, we have with us the management of Century Textiles and Industries, represented by Mr. J.C. Ladha, Managing Director, Mr. R.K. Dalmia, Senior President and Whole-Time Director, Vijay Kaul, CEO, Century Pulp and Paper, Mr. K.T. Jitendran, CEO, Birla Estates, and Mr. Snehal Shah, CFO. The format of the discussion would be a brief opening remarks by the management, followed by Q&A session. Without further ado, let me hand over the call to Mr. Ladha. Over to you, sir.
Thank you very much. A very good afternoon to everyone joining us today. It is my pleasure to welcome you all to the earnings conference call for the fourth quarter and financial year ended 2022. Since this call marks the end of FY22 and beginning of FY23, let me start with the macro overview first. The past financial year was a year of roller coaster for the global economy. Factors such as supply chain disruptions driven by container shortage, elevated international commodity prices, creating inflationary pressures on input costs for all businesses. Global financial market volatility. Furthermore, the rising tensions due to the Russia-Ukraine crisis continue to exert pressures on all economies. Domestically, the high vaccination rates and rapid government measures ensured that the impact of third COVID-19 wave remained minimal, resulting in gradual opening of consumption centers. The central bank's accommodative stance to maintain the status quo on repo rate has also acted as a sentiment booster. The announcements in the Union Budget on boosting public infrastructure through enhanced capital expenditure are expected to augment growth and bring in private investment through large multiplier effects over the coming quarters. Despite these disruptions caused by COVID-19 pandemic, Century Textiles and Industries witnessed a very strong performance and turnaround in operational and financial parameters across all businesses in financial year ended 2020. In our real estate business, we achieved a major milestone with the successful launch of our flagship project Birla Niara at Century Mills, Worli in February 2022, which received an overwhelming response. Our pulp and paper business witnessed significant and consistent turnaround in demand and realizations throughout the year. Despite the uncertainties and volatilities during the financial year, we achieved highest lifetime turnover in textiles business, crossing rupees 1,000 crore mark. For the financial year ended, the consolidated turnover grew by 58% year-on-year to rupees 4,068 crores due to a significant revival in both the manufacturing businesses of paper and textiles. The EBITDA for FY22 grew by 71% year-on-year to rupees 487 crores with consolidated EBITDA margin of 12%, and the net profit after tax grew to 154 crores from a loss of rupees 15 crores in the previous financial year. For the fourth quarter under review, the consolidated turnover saw a 45% growth YOY to rupees 1188 crores, while EBITDA for the quarter increased by 65% to rupees 133 crores, and net profit after tax for the quarter stood at rupees 84 crores against a loss of rupees 4 crores in the same period in the previous financial year. The operating cash flow for the quarter was rupees 97 crores and free cash flow stood at rupees 25 crores. Now let me take you through some of the key highlights across the three business verticals. Starting with the real estate business, in quarter 4 FY22, we had robust collections of around rupees 158 crores during the quarter from all the projects on the back of strong customer connect and outreach. For FY22, we achieved total booking value of rupees 1913 crores, which is more than 3 times that of previous financial year, with strong collections of rupees 351 crores, which is twice the collection figures of previous financial year. In the fourth quarter in February, we launched our much anticipated flagship project Birla Niara at Worli, Mumbai, which received an overwhelming response from the customers despite COVID-19 disruptions early in the quarter. We clocked sales of over rupees 1200 crores since launch, making it one of the most successful launches in Mumbai metropolitan region in recent years. We completely sold out the launched first phase of Birla Navya at Gurugram with total sales of rupees 624 crores from phase 1 of this project till date. And lastly, we also achieved sales worth rupees 86 crores during quarter 4 FY22 at our already launched projects. Recently, we signed an agreement to jointly develop a prime 52 acres land parcel in North Bengaluru with MS Ramaiah Realty LLP. The project has an estimated revenue potential of almost rupees 3,000 crores and development potential of around 4 million square feet and will comprise both high and low-rise residential developments along with retail and commercial elements. During the quarter, Birla Estates was awarded 2 safety awards from National Safety Council in Construction, one each for Birla Alokya Bengaluru and Birla Vanya Kalyan, and 1 award for Construction, Health, Safety and Environment at CIDC Vishwakarma Awards for Birla Vanya Kalyan. In FY22, we completed 8.5 million safe man hours at all our under construction projects. With the recent announcements in the Union Budget on boosting public infrastructure through enhanced capital expenditure, it is expected to augment growth in the sector and bring in large private investments through multiplier effect over the coming quarters. We believe that the sector is now at the cusp of multi-year upcycle for the residential real estate market, which is evident from the YOY growth in sales numbers at pan-India level. With the launch of Birla Niara, we have established our reputation in our focus markets, and we would now be capitalizing on the positive market cycle to grow our presence and become one of the leading players in the real estate industry in the coming years. Although we continue to cautiously monitor the inflationary price trends for commodities and metals and their impact, if any, on the projects. Now, moving on to the pulp and paper segment. For the fourth quarter of financial year 2022, our outperformance momentum continued, with the business achieving the production of 117,000 metric tons with an overall capacity utilization of 97%, with record sales volumes of 121,000 metric tons. In quarter 4 FY22, our net sales grew by 46% YOY to rupees 824 crores, driven by higher volumes and better realizations, while EBITDA grew by 54% to rupees 123 crores, with EBITDA margin for this segment also improved to 14.9%. For the financial year ended, our net sales grew by 59% to rupees 2,818 crores, while EBITDA grew by over 90% to rupees 424 crores, with EBITDA margins of 15%. During the quarter, copier grade paper remained in high demand in quarter 4 of FY22 due to opening up of offices, slowdown in Omicron cases, and initiatives by various state governments to reopen educational institutions, etc. Non-copier grade paper demand also improved in February 22 with opening up of educational institutes and schools after almost 18 months. Consumption of tissues in away from home segment improved due to partial opening up of tissue consumption centers Additionally, hygiene awareness among the general public resulted in positive results in the at-home segment. In paper board segment, order flow from pharma, FMCG, and food packaging sector improved, while non-packaging sector also observed progressive demand and export market demand was also good, with increased price realizations. Operational costs witnessed sharp increase in raw material prices, including wood, imported waste paper, coal, chemicals, and increased freight costs due to containers unavailability. And to balance out costs, multiple price increases were undertaken in all our segments, which have been absorbed in the market. As a result of multiple price increases, our average realization prices improved by 7.9% during Q4 FY22 as compared to Q3 of FY22. The domestic market is witnessing strong demand revival across all paper segments. Traders have also started building channel inventories, thereby signifying uptick in demand. Given the current domestic and global economic situation, as well as the reopening of all paper consumption centers, the Indian paper industry's short to medium term outlook appears to be optimistic. Now let us move on to the textile division. I would like to request Mr. R.K. Dalmia, who is the Senior President of Century Textile and the whole-time Director of the company, to give the key performance highlights. Over to you, Mr. Dalmia.
Thank you, Mr. Ladda. Good afternoon, ladies and gentlemen. For the fourth quarter under review, the sales grew by 54% year-on-year to rupees 308 crores, while EBITDA grew significantly to rupees 11 crore in this quarter from negative rupees 9 crore in same quarter in the previous year. For the financial year ended, our net sales grew by 78% to an all-time high to 1,037 crores, while EBITDA grew to 29 crores against EBITDA loss last financial year. In Q4 22, apparel fabric witnessed good retail demand, but margins got impacted by steep rise in cotton prices, coupled with increase in power and chemical prices. In bed linen segment, due to increase in cotton prices and higher inventory level in US, orders slowed down during second half of the year, causing significant drop in market prices. Prices are expected to be a point of concern till the cotton market settle down. During the quarter, we launched the Hill and Glade line of home textiles for domestic market. Our focus for financial 23 would be on offering new price-sensitive products and blending with the man-made fibers which can fit into the customer price bracket. Furthermore, we have planned to increase our geographic presence and add new markets like Australia, Saudi Arabia, and Russia after Ukraine war. Financial 23 will be challenging in terms of pricing, and we are cautiously monitor the input cost scenario. Now I hand over the call back to Mr. J.C. Ladda.
Thank you, Mr. Dalmia. Lastly, let me highlight to you on the various ESG, environment, social and governance initiatives undertaken during the quarter. At Century Pulp and Paper, despite having set a goal of distributing 1 million seeds and saplings to farmers in FY22, I am pleased to inform that the team could distribute 1.6 million seeds and saplings in FY22. It also continued to maintain its program of using wood bark as a fuel in boiler, substituting a significant part of virgin coal and thereby lowering carbon emissions. On the social front, we undertook repairing, waterproofing and painting work at Janta Inter College, Bindukhatta, Lalkuan district, Nainital. For provision of drinking water in Shantipuri region, we installed 20 hand pumps. And on the request of Chief Minister Uttarakhand, we made the provision for blood bank at Government Hospital, Khatima district, US Nagar, which would benefit 7,500 people in that region. In our textile business, we successfully completed upcycling of waste to manufacture bricks from fly ash, and these prepared bricks will be used in NEEDS project running at site. On social front, We have set up COVID awareness campus in our factory located nearby villages. This activity also helps villagers to identify the abnormality in their body profile and take preventive actions for the same. In our real estate division, we have implemented preventive measures to reduce air pollution and also conducted a study to develop project-specific air purification solutions. In conclusion, we are proud of the many milestones achieved by the company in the financial year 2022 and are confident of continued performance in the next financial year. With that, we can now open the floor for the question and answer session. Thank you very much, ladies and gentlemen.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and one to ask a question. The first question is from the line of Parin Gala from Sage One Investments. Please go ahead.
Yeah, thank you for the opportunity, and sir, congratulations on great set of numbers. So I just have two questions regarding the real estate division. One is for our Worli project. In this current phase, what percentage of the phase would we have sold in the preliminary booking? And second is in the new Bangalore project, in that JDA, what are the timelines of starting the project and the completion?
Hello. Hi. Sorry. Hello. Can you hear me?
Yes. Yes.
Yeah. Okay. Sorry, I just missed the first part of the question. I heard about the Bangalore project. The Bangalore project, in about 12 to 15 months, we should be starting this project. It will take about 12 to 15 months for us to launch this project. Which is the first part of the question?
The other question was the what percentage of inventory you sold in the initial phase?
Yeah, so we had about 414 apartments. So far, I think we have sold about 215 or so.
Okay. So, sir, in the previous call, we had mentioned that if we are able to clock 50% of the bookings or something, you could start working on launching phase 2. So, any guidance on that?
No, I think we are still looking for some more sales. Maybe that 50% may be too low. I think we would rather look at a little more, maybe about 60-65%. And then we would, plan to launch the next phase, Tower B.
Sure.
Parin, sorry, we lost your audio.
No, I'll come back in the queue. I'm done for now. Thank you so much.
Thank you very much. Participants, you may press star and one to ask a question. The next question is from the line of Amit Srivastava from BNK Securities. Please go ahead.
Yeah, thank you for giving me the opportunity. My first question is on the paper side of the business. So we have seen some improvement in profitability. Volume was very strong. Then our realization has also improved. So just wanted to understand 2-3 things in that. One is that in terms of volume, how are we placed for the next year and coming year? Because it appears that we are already at optimum utilization because 121,000 is sales volume which we have been indicated. So how much growth which can come based on the plans and whatever the capacity we have? Second, in terms of the pricing, where are we versus the average realization of last quarter? And what could be the sustainable margin which we are looking at in FY23 in the paper business? Yeah.
Mr. Cole, you may take up.
Yeah. Good afternoon.
Yeah.
The increase in the production capacity or the sales capacity will be totally about 30 to 40,000 tons in a year. In the first 2 quarters, it will not be more than what you have seen in the quarter 4, but in the last 2 quarters, that is the quarter 3 and quarter 4, the capacities will increase because we are going to fix up certain issues with the tissue, and the capacity will increase there. The board capacity will also increase by about 20,000 tons by September, as well as the paper capacity will increase by about 10 to 15,000 tons. So next 2 quarters, third and fourth, we'll see the growth in the volumes. First 2 quarters, we will remain more or less same, or maybe here and there something. As regards the prices will be according to the market conditions, and I hope they will be better than the quarter 4 prices. And as regards your third question was on what sustainability.
Yeah, profitability, sir.
The profitability will definitely be better than the last year. So as the prices have moved up, but at the same time the cost input has also moved up. So because we are doing certain things in recovery system by which we will gain something in the steam and the power cost, and maybe that will help us to improve upon the profits to some extent than the current quarter 4.
So, sir, this quarter we are at a EBITDA margin of around 15%. Earlier in the cycle, we were around 20% plus kind of margin. The prices has increased significantly, what we hear from the market. So, is there this possibility that we can again go back to 20% plus kind of margin in the coming quarters?
Well, it is very difficult to say whether we can go to 20%, but it is we can surely say that it will be definitely better than the quarter 4, because the prices have increased, but at the same time the input cost is also increasing drastically. So today, I was in the market last week, and what I was told by the people, by our customers, esteemed customers, is very clear that if you go on increasing prices every month, we will have to close down the shop. And so many people have already reduced their offtake because the prices are at the peak. So we have to have a balance of prices versus the demand, what you can see in the marketplace. So that balance has to be maintained. So I really cannot say whether we will go to 20% because of the input costs, and but we will definitely be better than quarter 4, that much I can tell you.
Okay, got it, sir. And the current prices are higher than the average price of 4Q, sir. By how much, if you can give the broad idea?
Yeah, I think the current prices in the quarter 4, what we have shown is about 68,000 per ton of all varieties, that is the paper, board, and the tissue.
Right.
I can tell you one thing, that in the month of March, it was already 70,000.
Okay.
So the average for the quarter was 68,000, but in the month of March it was 70,000. So definitely that 70,000 will get forwarded to the first quarter of this year. So it should be a better quarter.
Okay, got it. Thank you, sir. Yeah. My next question is on the real estate side. So first of all, congratulations to the team for a strong pre-sales number as well as signing the large JDA deal. Just wanted to know 2 things. One is that what was the average selling price for the Birla Niara? And second is that how is the pipeline for the coming year in terms of the project launches? What is the inventory we are looking at to be in the market for the next 3 quarters which year? Yeah.
Thank you, Amit. So thank you for the the best wishes. And the first question was on the average APR. The APR is in the region about 56,000 rupees per square foot, what we have achieved at Birla Niara. And this year we are looking at the launch of a new phase in Kalyan, a new phase, couple of new phases in Gurgaon, and hopefully completion of our first project in Bangalore, completion of sales there, and about 1,000 crores of sales at Birla Niara.
Okay.
Yeah.
Okay.
We have also signed a new project which we too stretched to launch this financial year. We'll be hoping to launch it in the coming financial year.
Yes, right, sir. So broadly, this 2,000 crore of kind of pre-sales number looking more sustainable, sir?
Yeah, that looks sustainable. We plan to grow from there, but I think that growth will largely happen in the coming year, not this year. It will be we will try to show some growth, but the big growth will come when we finalize more projects and build on that growth.
All right. Okay, got it, sir. Thank you. That much for my side.
Yeah.
Thank you. Participants, you may press star and one to ask a question. The next question is from the line of Akshay Ajmera from Nizara Securities. Please go ahead.
Thank you so much for the opportunity, sir, and congratulations on very good set of numbers. My question is regarding the real estate business. First would be the follow-up question to the earlier question. So you just mentioned that in the coming year we have Gurugram and Kalyan new phases in the pipeline, plus 1,000 crores worth of worldly sales. So put together, how much will be the value of all these phases? That is number one. Number two is, have we finalized the contractor for our worldly project? And aligned to that question, my another question would be if, so in earlier question you have mentioned that at least 60 to 75% of the sales is what we are looking to launch the second phase of worldly. So assuming that if we achieve 60-70% of the sales, then how much time it will take for us to launch the second phase in terms of approvals, and what is our preparedness in that? These are my three questions, sir.
Thank you, Akshay. On the first part, you're asking, the combined phases of all these projects which are already launched. I think we will be around about 2,000 crores, which we are planning for the next year.
We'll be clocking kind of similar sales which we have clocked this year.
Similar sales, maybe about 5 to 10% higher, maybe, but largely more or less the same number. The big growth, I think, will come when we finalize more projects and in the coming year, in the following year, next financial year, along with the hopefully phase 2 of the Tower B of Birla Niara also. The construction, we are currently the piling and the excavation work is going on. We are not yet finalized the final contractor. We are in negotiations with several contractors. Hopefully, in the next couple of months, we should be able to seal the contract. And on the second phase, we will take about 15 months or so. We need to assess the market once we do about 60-70%, whether we need to do some bring some changes in design, etc., to attract to a new segment, because the big success of this launch of the first phase has been that there is a huge demand for this product because it is not available in the market.
Right.
So similarly, now we have to skew the design for the next one. So once you get reasonable traction, reasonable inventory of this is sold out.
Right.
Then I think we'll very quickly plan it, and of course you have to go through the approval cycle and all that. So it will take about 15 months, is my assessment.
And
this is a very significant. Sorry.
Sorry. Go ahead.
No, I'm saying this is a very significant. Each tower brings in lots of volume into the market, inventory into the market. So you have to try level best that it is as close to the demand as possible.
Absolutely.
So we will not hurry too much in bringing the inventory because as I mentioned, it's about 8.5 lakh square feet of inventory.
Right.
So we would like to be doubly sure before bringing it to the market.
That was very helpful, sir. And lastly, we have been hearing that there is a huge increase in the cost side because of the rise in the commodity prices. So are we being able to pass on the cost and increase the average realization, especially in the new project launches that we have?
Yeah. So Akshay, there has been increase in steel and RMC prices, some bit of in aluminum prices. Of the projects which we had launched earlier, such as Kalyan and Bangalore projects, where most of the bulk of purchases are already being done, so the impact is minimal, and our escalation, budget within our overall plan budget will take care of that. No worries on that. The new projects, of course, we will be budgeting it as per this thing. As far as we are concerned, right now we are well in control. Also, what we plan is that we don't sell the entire inventory. We have inventory left in all of our projects. So these inventories should take care of these increases if there is a overspill of the cost, which we don't anticipate at this point of time. And the last bit is that, in a JDA project where profits are shared, there is further, costs are also shared. There is further risk mitigation. So from all those points of view, we are well in control.
Thank you so much, sir, and wish you all the very best.
Thank you, Akshay.
Thank you. Participants, you may press star and one to ask a question. The next question is from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Yeah, namaskar, sir, and thank you for this opportunity. Firstly, Ladaji, you were explaining about the problems the home textile segment is facing. So, if you could further dwell into, sir, how is the home textile segment currently placed, and with cotton prices, yarn prices, and the subdued demand in the home textile segment? If you could give some more color to it, sir.
Dalmia ji, would you take up this? Dalmia ji?
The home textile market at present is very volatile because of cotton prices in 1 year. If you see from April 21 to March 22, the just last financial, the financial which is closing now, is more than 100% it has got increased. Apart from that, is prices of color chemicals, power, coal and all. So overall, these prices to absorb is very difficult at present. Secondly, US market is not doing great. The reason behind it, so many orders were there from US market, which we supplied on time, but they could not reach due to logistic problem of congestion at the port and difficulty to get the container. So they could not get their goods at time. So their season was over. So they received late stock. So they have a lot of pile up of inventory. So they have slowed down. So at present, the home textile market is very difficult. Secondly, the yarn prices is also now not able to cope up the entire increase of the cotton prices. And so overall situation at present, because of unreasonable hike in cotton prices, home textile business is not good. But hopefully, when the inventory of US is over in couple of months, demand will come, and then price increase will also be there. And to some extent, we will be able to meet out the increase in the cotton prices.
So, sir, as there is a huge inventory built up in the US market, how is the current domestic yarn prices, sir? They have also softened out because of the no further orders from the US.
You are right. Yarn prices also softened out because the orders are not there, but still it is very high as compared to the earlier one because of the cotton price. But at present, entire value chain of textile is suffering because of sudden increase in the cotton prices. It is more than 100% in a year time.
Right, sir. And also for the utilization levels, sir, any color you can give? What is the utilization level for the mills across the country for the yarn? Currently, they are at what sub-utilization levels?
Yes, the yarn spinning mill.
Yes, sir, spinning mill.
Utilizing around 60 to 70%. As for the apparel business in the domestic market, that is doing good. They are utilized fully. We are also utilizing the full capacity of the apparel business. For home textile business also, the capacities are not fully utilized in the industry.
Right. So coming to the paper and pulp segment, as been mentioned earlier, that there also we are facing the headwinds of the raw material prices, energy prices. So what currently are the positives for the sector that is yet to play out going forward?
The positive is the market factor, because all markets have opened and the Indian market has opened. So from the Indian market, so the demand is there. So we are able to get a reasonable price increase from the market, even though there has been an increase in the raw material prices throughout. And but we are able to realize better price margins from the customers, and we hope that it will continue as the economy progresses. Indian economy also progresses. The paper market should also progress accordingly.
So you are saying that there's a complete pass on of the inflationary cost for the paper sector?
No, I never said that.
Okay,
that is the complete. I said the price increases have been there, but as I was telling earlier also, for everything there is a limit. So we cannot go beyond a particular limit. Then it will get substituted by some other product.
Absolutely right.
Yeah. So we have to balance it out in a way that we get a price increase, but it is not too much for the customers. And that's how we have to, we have to keep on analyzing that, assessing that, and then accordingly increase the prices.
In addition to what Mr. Kaul has said, the biggest positive is that there's a new education policy announced by the government. So I think in all the states there'll be a renewed demand of writing and printing paper, particularly to publish new syllabus. So that again will be attracting a good demand. However, of course, as Mr. Kaul said, the increase in raw material prices, there's always a time lag, and we'll have to watch the market and take the right decisions at the right time. It's being closely monitored. Thank you.
Thank you. I'll request Saket Kapoor to come back in the question queue for a follow-up question. The next question is from the line of Deepak Lalwani from Unifi Capital. Please go ahead.
Hi, sir. Thank you for the opportunity. My question is for the paper segment. So, sir, what has been the cost increase, both in energy cost and chemical cost, quarter on quarter, and how much of it has been passed on to the customer?
So you see, it is not a quarter to quarter. Let me tell you, every 15 days there is a price increase now. So if I buy something today and after 15 days, if I ask again a quotation of the same material to be procured, so then you will find that the prices have changed. In some cases, yes, there has been some stability, but in majority of the chemical prices, there is always an increase. And similarly for the coal, it is. I think the coal prices are something which is like worse than the share market, because if it is 12,000 today, tomorrow it is 14, and then it is 18,000. Then if you import the coal, it is 22,000. My sister organization is importing at 21,000. My sister organization is giving me coal at about 15,000. So it is all over the place. It's very difficult to predict what it is going to happen. We have to, but to our customers, as I said earlier also, to our customers, I have to be fair to them. I have to be very discreet with them and give them a price by which they are able to sell their product and they do not get any hiccups while talking to their customers. So as I said, I was in the market last week, and certain people told me that beyond a particular limit, if you increase the prices, then there is going to be a problem. But yeah, reasonable price increase is okay. So we are very calculatively, very meticulously organizing things and seeing that we give the right type of, we save our interest also, but at the same time we have to take care of the customer, because customer is the king.
Right. So in the 70,000 per kg realization which you mentioned in the month of March,
yeah.
So all the cost increases have been captured in that price, or would you have to take more price?
No, not really. The price increases, the entire price increase has not been captured, because entire price increase will be captured when our prices are around, as on March. If you take when our prices would have been around 72,000 rupees. But, since March, since 31st March till 25th of April when we are discussing today, there have been further price increases everywhere, left, right and center. So we do not know. I have not yet done the calculation as to where we land now in the prices.
Okay. Right, sir. And sir, just wanted to know your sourcing mix for coal. How much is procured from linkages? How much do we import?
Oh, my dear, everything is, in fact, we are in a better position, but the government has stopped, given the linkage coal. We have a linkage coal. 90% is allotted to us on a linkage basis, but government has stopped linkage coal giving it to you. So that is where the problem is. So there is nothing like we have never imported so far. For the first time, I will be importing because the government has stopped the linkage.
Okay.
Yeah.
Okay.
Just to give the perspective on coal, in addition to what Mr. Cole has said, if you see Q4 as compared to last year's same quarter, the coal prices have gone up by 29%. The main reason is we are not getting the coal from linkage and we have to buy from the market. And if you see year on year, 21 to 22, the prices of coal have gone up by 11%. And this is the same story for all the input costs. And seeing the abnormal situation, as Mr. Cole has mentioned, we have to balance out and carefully consider when to increase the price and to what extent, keeping the interest of all the stakeholders in the supply chain. Thank you.
Right. So, and lastly, sir, one question is that
inform that we're not really dependent much on the coal for power because we got a reasonably good electricity supply. But what we are doing also on the coal required for steam generation.
Okay. Got it, sir. And sir, how are global pulp prices today, and what is the scenario of imports in the country?
Yeah, the global pulp prices. Let me tell you, every week it changes. And today, if you ask me about last week, if you ask me about softwood, it has gone beyond $1,100, which in the month of December was only $800. So 4 months, $300. Similarly, hardwood, it has gone beyond $950, and which was just about $650, $700 I have purchased in December. So as I told you, it's not only the question of it is a logistics issue, it is a delayed supplies, it is not reaching in time, and the prices of the pulp. And there are 2-3 pulp mills which have closed down for annual shutdowns and annual repairs and all that. That has also pushed up the prices. So the pulp is in a very, very bad shape at present.
Right, sir. And the paper imports, if you can give sense as to
paper import is there, but not to that extent, not the direct paper. There are certain varieties of boards and there are certain varieties of tissue where there are very little imports, not much. Earlier, 2-3 years back, it used to be from China, which has stopped completely.
Thank you. Deepak, I'll request you to come back in the question queue for a follow-up question. The next question is from the line of Nishit from Equirus Investments. Please go ahead.
Good evening, sir, and thank you for this opportunity. So I have, sir, 2 questions relating to the paper segment. So the first is this relating to pulp. So how much do we actually import?
How much do we import? We import about, say, 10 to 11,000 tons a month.
11,000 per month, and this would be hardwood plus softwood both?
Yeah, it is hardwood, softwood, mechanical pulp, hardwood, softwood. So 4 types of pulps.
Okay. And so second question is that currently how much are we exporting, and what was the same percentage last quarter and last year? Has that increased?
If you say that it is exporting around 15% around. Some months it may be more, some months slightly less, but around on an average 15% we are exporting, and that too the board and the tissue, not the paper to that an extent.
Okay. So just to answer your question further than what Mr. College said, in Q4 FY22, the export was 18,335, which was 31% higher as compared to the same quarter last year. And if you see year on year, the export has grown up by 66% in terms of volume.
Okay. That's great, sir. That's all, sir. Thank you.
Thank you. The next question is from the line of Alpesh Thakkar from Antique Stock Broking. Please go ahead.
Thank you for the opportunity and congratulations for a good set of numbers amidst this, external headwind. So my couple of questions that I have mostly pertaining to the real estate part of the business. The first one is, sir, how many projects do we expect to add in FY23 in terms of like a business development ballpark figure would work?
Hello. Hi, Alpesh. Good evening. So we are looking at, several projects. Difficult to put a number specifically depending on the size and investments. But we are looking at, we have key focuses on, expanding our footprint in our stated geographical markets, Mumbai, Pune, Bangalore, and NCR. We are there in 3 markets. We yet to make our presence in Pune. So we will be focusing a lot on, increasing this pipeline. But to actually put a number would be difficult, but I can only say at this point of time we're looking at several.
Okay. Okay, got it. Second one would be, I do understand that we have still not finalized the contractor for our Niara project. But for our other projects, that 3-4 projects that we have, so who would be the contractors there for us?
So we have Shapurji for Kalyan, Bombay. We have Elite Constructions for Alokia, Bangalore. We have Krishna Estate. Krishna, I don't know this part.
Build Estate, KBE you call it.
Yeah, Krishna Build Estate for Gurgaon. So these are our contractors we are working with currently. Tisya and Niara we are yet to award the contract.
Okay, got it. And thanks for that. And sir, last one, it is again on the mostly from construction from the cost point of view for Niara. So can you just break down the cost there, like in terms of cost of construction versus non-construction cost, like FSI premium, TDR, fungible FSI, etc. For our Niara project? Like any ballpark figure would also work.
Ballpark, as I told you, 10,000 rupees is our construction cost, and the rest is all, the sales and marketing costs, premium costs are in the region of about, we have approvals costs, we have FSI costs, which includes premium, TDR, etc. Then we budget for escalations. We budget for design, everything, and all together it could be in the region of about 10,000-20,000 or so.
Okay. So extra above that 10K construction cost, it would be around 10K again, right? So total would be around 20-25.
Yeah, more towards 80.
Okay, got it. Thanks a lot. That's it from my side.
Thank you.
Thank you. The next question is from the line of Prateek Singhania from Sage One Investments. Please go ahead.
Yeah, hi sir. First part of the question was same as.
Prateek, sorry to interrupt, your voice is echoing. May I request you to speak through the handset?
Yeah, is this better now?
Yes, thank you.
Yeah, so first question was same as the earlier participant asked with respect to the development, but I think you're not able to quantify it. Second is with respect to the location of this 52-acre project that we have signed right now. So any like nearby landmark or something?
Very close. Yeah. So Prateek, this is very close to the international airport. It's about 3 to 4 kilometers from the new international airport of Bangalore.
Okay, and a ready constructed project would be available at how much per square feet realization?
Close by must be in the region of about 5,500 to 6,000.
Okay, and although it is repetitive, how can you elaborate more on the project pipelines, because that is a very key monitorable for us?
Yeah. So as I mentioned to you, we are pretty focused on that. We want to increase our footprint. The key one so far was, getting Worli launched appropriately with full focus, getting it right. I think that is done. I think now the big thing is to build a brand across nationwide footprint, and also, focus on rapid expansion. So I can only say at this point of time, we are very hungry. We look at as many deals as possible, which fits in with our parameters, and we'll be going all out on that.
And if I have to ask you, of all the deals that you are evaluating, how many deals would be like due diligence would be over and you would be in a negotiation stage?
Yeah. So pretty much into the details you're asking now, but I'm sure I can tell you that at least about 10 projects we are negotiating at this point of time.
Oh, superb. Thank you so much, sir.
Thank you. The next question is from the line of Harsh Parak from B&K Securities. Please go ahead.
Hi, sir. Thank you for taking my question and congratulations for a good performance in the residential segment. So my question was pertaining to the new deal that you have signed with MS Ramaiah. What kind of arrangement are we having? What is our stake? Is it a revenue sharing or a profit sharing model? Can you please throw some more light on that?
So Harsh, I think what we have signed up is for a profit sharing deal, 5347. We paid over 65 crores as a upfront deposit, adjustable. Yeah, so that's broadly the deal.
Okay, got it. And this we would be launching in the potential that we said 3,000 crores. So that is completely our share, or it would be still.
That's the total deal. That's the deal. It's a full potential of the project is that much.
Sure. And sir, since we are talking on Bangalore, so we would be seeking for more deals in around Bangalore region only. Like we are seeing many developers launching projects in Chennai, Hyderabad. Many are even going for plotted developments. So would we be looking at that space also, or we would be going by what we are doing right now only?
So largely, we have, as of now, we have signed up for 3 projects in Bangalore. 2 are we have launched, and this one we are planning for the launch. We will be looking to further consolidate ourselves in the city of Bangalore, and our other target markets are Mumbai, Pune, and NCR. Mumbai we have 2 projects now. NCR we have one project in Gurgaon. We will focus would be to further deepen our presence in these markets. Very critical. We are not looking at in the short term to any other cities. I think we need to be more focused in cities where we operate. I think these 4 markets together constitute about 65% of the residential real estate market. So that's where our focus would be. And as far as the plotted is concerned, I think it's a good opportunity. It's a quick win if you get the right location, right price. I think it is a good model because the turnaround is very quick. We are also looking at some projects where we could add reasonable value. So if something fructifies, we'll be happy to announce.
Right. Sir, and pertaining to the staff colony, so any more updates there regarding the title transfer, and what would be our incremental plan on that particular land parcel? Any development that you are foreseeing right now, or it is still under wait and watch mode?
No, it's definitely not in the wait and watch mode because we will be commencing, or we have started planning for the redevelopment of work of that place in terms of workers' rehabilitation, etc. As we spoke about last time, we did win that High Court order in our favor, which is an order very clearly to execute the land title in our favor within 8 weeks. 4 weeks have already passed. I think we will have a strong plan. We have a potential of about more than 1 million square feet of free sale development there. First, we'll focus on rehabilitating the worker colony, and Subsequently, we will, plan when we come to that stage, the right sort of mix. I think that's a very well located land. The views of that land is even better than Worli East, where we are currently launched. I think it's a very high potential land. At the right time, we will focus on creating a very strong, saleable product there.
Right. So the 1 million square feet development will be fully residential, nothing on any commercial or the retail part we are planning there?
Too early to plan now. It's a few years down the line, Harsh. We may look at the right product. At this point of time, it's under study.
Okay. So means nothing like it will be even more premium than Birla Niara or on the same lines.
Could be, because it's very well located. Depending on how the whole the shape of the land, the shape of the design, the master planning, etc. comes. I think there's a good potential for us to even do better than Birla Niara.
Right. So, sir, just for a clarity, can you please just break down the Worli land parcel, development potential, including the Niara land parcel, so that it gets more clearer on what kind of development we are seeing in the entire land parcel there.
So I have previously mentioned also many number of times the overall potential is about 5 million square feet, about 20,000 crore plus. Considering both Worli East and West together, and of which about 1 million square feet or so currently the plan to do commercial, 100,000 sort of this retail, prime retail upfront, high street retail, and the rest largely residential, unless the market again changes and presents or opens up for new opportunities. The entire plan we hope to execute in the next 8 to 10 years.
Including the employees colony.
Correct.
Sure. And this, just a clarity, 20,000 crores is the entire 5 million square feet employee colony included.
That's right.
Okay. Sure. Thank you. Thanks a lot, sir, for taking my questions, and all the best.
Thank you, Harsh.
Thank you. The next question is from the line of Biplab Debbarma from Antique Stock Broking. Please go ahead.
Thank you, Neeraj. Sir, one just clarification and one question. The clarification is, sir, you mentioned about 20,000 rupees per square feet construction and other. So that is on the, so if we have to calculate that, we calculate on the saleable area, right, sir?
That's correct.
Yeah, okay. Now my question is on the, you have started what we call colloquially soft launch in November, and now it is 25th April. So have you witnessed, because you have sold more than 1,200 crores inventory in this such a short period of time, that means launch has received tremendous response. In this period, from November to say April or March, have you witnessed like to like, or did you increase, did you increase the price on like to like basis? I mean, if I have to say, what would be the average selling price in terms of INR per square feet in last 10 transactions vis-a-vis the average? So could you give us some idea of the whether price moved in this project?
Biplab, thanks for the question. Just to clarify, we did not launch in November, we launched in February. Yeah, November, I think we got the RERA sometime in November end or so. I don't remember now exact date, but we really, we got RERA. We really started Feb early we wanted to launch, but there was the Omicron waves kind of stopped us from doing that. Finally, we started doing this I think the launch started in mid-Feb. And it's been a month or a half in which we did about 1,238 crores. We, of course, started at about 56,000 is the area, the price per square foot on carpet. And we have not increased that price. We kept it because it was a pretty, reasonably strong price. So I don't think at this point of time we are looking at immediately, maybe in the next few months or so, we may do that. once we achieve our target inventory sale at this price as per our business plan. But right now we have not done any price increase.
So, sir, what about Gurgaon? Because this is what my understanding is. Gurgaon also, we are seeing a lot of traction in the entire market in independent stores and premium segment. So, and yours being in a premium location, Golf Course Road, I assume that you too been seeing a lot of demand. So, in the last 3-4 months, any price increase happened, or just it is marginal price increase happened in Gurgaon product?
So Viplav, Gurgaon, of course, the story has been a little different because we launched it about almost 2 years back. So last November, I think we launched it, and we started it at about 10,300, and today we are selling it almost at about 12,500 or so, 12,300 or something like that. So we have got very good appreciation. Gurgaon market has really there's been a shortage of inventory, and especially for products like ours, which is the floors. So there has been a very strong demand, and we are also run out of inventory now there. I think within a period of less than 2 years, we've sold almost 300 apartments of 625 crores inventory. Now we're just waiting to launch the next phase. We haven't got the RERA clearance yet. We're supposed to have launched it in last quarter, but because of these various lockdowns and other issues, the approval process got a bit delayed, but that has only helped in increasing prices. Prices are increasing there. The demand is pretty strong. So I think we will be launching even at a higher price than this when we launch the second phase. There has been a substantial price increase in that market.
Okay. Thank you, sir. That's all from my side. All the best, sir.
Thank you. The next question is from the line of Ajit Darda from Nizar Securities. Please go ahead.
Hello, sir. Good evening, and congratulations on good set of numbers. So I have a question with respect to paper business. Just wanted to understand the increase in raw material costs and power cost of paper business in percentage terms. If you can throw some light on that.
Okay. You see, in terms of power cost, it has gone up almost by 29% over the last year. And as regards the the chemical and other pulp costs, it has gone up by almost 40% than the last year. So that is the.
And what is the way ahead, sir? Means how do you look the prices in future?
Well, pulp prices are still going up. Power prices are going up because of the government's restriction. Otherwise, we have a linkage, so we could get back to the. If the government removes the restriction on the linkage, we will be back on the normal prices of the coal. So the power, that is not a problem. And mostly, actually, in fact, even the Uttarakhand government, the power cost is not much. It is only 5 rupees 50 paisa a unit. But, because we consume a lot of steam in the process, so for that we have to run the boiler more. So because of that, the steam cost is going up. But if they remove the restrictions on supply, even though we have got a complete agreement with them, but there are restrictions. So I don't know, but the coal prices are, fluctuating. You can say on an average basis, that today the coal price is almost around 18,000 rupees per ton, as against 5,000 rupees, 4,800 to 5,000 rupees, a normal coal price. So that is the type of increase in the coal prices. And I don't see that this coming down in the next 6 months at least.
Okay. And what is the probability that government will take out the restrictions on supply side?
There is no probability. We have also represented, our IPMA has also represented to the Prime Minister directly that, why you are, because our power plant is not, it is also, running the industry. It is also giving power to our colony people. So why you are restricting and why you are putting these barriers? on us, but so far no reply has come from there.
Okay, sir. Okay, understood. Thank you very much.
Yeah.
Thank you very much. Ladies and gentlemen, that was the last question for today.
Okay.
And now hand the conference over to the management for closing comments.
Thank you. Thank you so much. Thank you all for participating in this earnings con call. I hope we have been able to answer your questions satisfactorily. If you have any further questions or would like to know more about the company, please reach out to our IR manager at Velorum Advisors. We are very thankful to all our investors who stood by us and had the confidence in the company's growth plans. And with this, I wish everyone a great evening. Thank you very much, ladies and gentlemen.
Thank you very much. On behalf of Antique Stock Broking Limited, that concludes this conference. Thank you for joining us. You may now disconnect.